Thank you, Mr. Speaker, sir. Mr. Speaker, sir, I'd like to thank the honourable member for this question. And indeed, it is a very important question, and for us, all of us, as members of Parliament, to be aware of what is happening outside Fiji, in particular the overall economic situation globally. Mr. Speaker, sir, as highlighted in the budget, we had warned of an impending slowdown in the global economy in 2019. Mr. Speaker, sir, after years of course, strong growth. At that time last year, the International Monetary Fund had projected global growth at 3.3% for 2019, down from 3.6% the year before. Unfortunately, Mr. Speaker, sir, the outlook has not improved since then. It has in fact deteriorated even further. Instead of a global slowdown, it appears that we may actually be on the verge of a global recession. If I could elaborate, Mr. Speaker, sir. In July, the IMF reduced its 2019 global growth forecast further from 3.3% to 3.2%, the lowest mark since the onset of the global financial crisis. And as has already been highlighted, that most of the growth in any case is coming from the emerging economies. Mr. Speaker, sir, there is a number of combination of ongoing and emerging obstacles at the root of the looming recession. These include, of course, the much publicized US-China trade war, a growth slowdown in the US, increasing trade tensions between the US and the EU now, Brexit concerns, staggering corporate debt in China, rising oil prices given the uncertainty in the Middle East, turmoil in global financial markets, and greater uncertainty in a number of emerging and advanced economies also, as we've seen, including most of our major trading partners. Just very quickly, Mr. Speaker, sir, because obviously it's a very extensive subject, I don't want to talk on for too long. The US, as you see, Mr. Speaker, sir, has placed additional tariffs on Chinese imports of intermediate and finished goods. Currently, Mr. Speaker, sir, the total value of US tariffs applied to Chinese goods is $550 billion US. Although these tariffs are not expected to have a lasting impact on China, they do, however, present a major challenge for global supply chains. Mr. Speaker, sir, China has responded by raising tariffs on imports from the US while cutting tariffs on imports from other countries. The average tariff on US imports is now 20.7%, while the average tariff on imports from elsewhere is 6.7%. So you can see that the non-US countries are being given preference by the Chinese government, meaning that American goods are not as competitive in the Chinese market as they used to be. Currently, the total value of Chinese tariffs applied to US goods is $185 billion US. Mr. Speaker, sir, just very quickly with the US economy, the trade tensions and the very heavy-handed protectionism that have arisen because of this political decisions being made has prompted businesses to adopt a wait-and-see approach, with investment activity contracting by 0.6% in June in the first 3 months. The housing market has also been affected, declining for 6 consecutive quarters up till June. And obviously the trade war has had a huge negative impact, not just in terms of the actual runs on the board on the ground, but in terms of the psychology of it all. And Mr. Speaker, sir, one of the most telling determinants of whether a country is doing well, whether there's confidence in the economy, is what we call looking at the yield curve in the bond market, Mr. Speaker, sir. So, for example, Mr. Speaker, so the yield curve shows the spread between the yields for long-term and short-term government bonds or treasury bills. Generally, the yield on the short-term bonds is lower than the yield on the long-term bonds. So when you have a lower sort of bond, a 10-year bond, the yield curve will actually go up in that way. When you have a shorter term bond, the yield curve will be much smaller. If investors, however, from that what it means is that short-term bonds are lower yield because long-term bonds are viewed as safe. You know, you can invest on a long-term basis, you tie up the money for long-term. If, however, investors fear that a recession is near, they will move away from more risky, volatile assets such as stocks and short-term bonds towards long-term bonds. This higher demand for long-term bonds will drive up the prices and push down the yields. Eventually, the yields are pushed down so far that what you see, the bond curve actually will invert. In other words, it starts dropping off in that manner. So, Mr. Speaker, sir, what we see now is that the inverted yield curves are beginning to happen in the long-term bonds in the US market. Generally, when it starts inverting, that's generally an indication that a recession is about to set in. And that has always been the trend since 1950, which is the most reliable indicator of a looming crisis. Of course, Mr. Speaker, sir, you've seen the sentiment in the global financial market activities. You see it in US, Europe, China, Hong Kong, Japan, and the rest of Asia falling lately. Even in Australia, in 2 days, they lost in excess of 80 billion Australian dollars in 2 days in the stock market. The Chinese economy, Mr. Speaker, sir, again very quickly, grew by a record low of 6.2% in the second quarter of 2019, while annual growth slowed down to 6.6%. Normally, the Chinese economy grows at a much faster rate than that. The downturn, of course, is partly because of the ongoing trade war and partly due to recent stimulus measures by the Chinese government to boost domestic demand, such as reducing lending rates, cutting taxes, and increasing infrastructure spending. However, Mr. Speaker, sir, these fiscal measures, and indeed monetary measures, have not had the desired impact. There's corporate debt growth now of 155% of GDP in June 2019 in the Chinese market, and a greater risk of corporate debt defaults. Mr. Speaker, sir, there's another trade war looming or brewing between US and its long-term ally, the EU. As part of its America First protectionist policy, the US in 2018 placed tariffs on steel and aluminium imports from a number of countries, including several members of the EU, to protect its national interests, as they say. In response, the EU placed duties on US imports, such as motorcycles and bourbon. The US is considering further tariffs on European goods, including cherries and whiskey, and has also threatened tariffs on luxury items such as German cars and French wines. The German economy, Mr. Speaker, sir, contracted by 0.1% in the second quarter of 2019, and the central bank now predicts a further decline in the third quarter. UK, of course, Mr. Speaker, sir, very quickly, we know that they're continuing brushes regarding Brexit. Now, of course, we've seen that the Prime Minister of UK has suspended Parliament. There's a whole lot of tension around that, whether in fact he has the legal authority to suspend Parliament. And there's now, of course, the deadlock remains over no deal Brexit or a deal with Brexit. And again, it has a huge impact on the movement of finances and indeed corporates in that area. Mr. Speaker, sir, the other countries, of course, are feeling it. New Zealand, Mr. Speaker, sir, there's a recession starting to hit closer to home. And again, there's a sluggish in the housing and construction activity. It's a weak growth, low household spending too. Mr. Speaker, sir, Australia, as I mentioned, of course, the economy has been very lethargic. There's a lot of predictions about them sort of going into negative growth, which they haven't experienced for a very long period of time. A lot of speculation because of many of these political decisions that have been made, and indeed, of course, as we've always seen, the world economy always has what we call a spike, and it does slow down. The issue here is how much of the slowdown will it actually fall into, and that's what we need to understand. Now, what are the implications for Fiji? I mean, as I mentioned earlier on, Mr. Speaker, sir, that one of the advantages of Fiji not necessarily being so deeply immersed or part of the global economy is that we can have certain buffers. However, of course, it can have an impact on us. And one of those things is, for example, if the Australian economy does slow down significantly, and the New Zealand economy, it can have an impact on our tourism sector, given that Australia and New Zealand account for more than 60% of our tourism arrivals. Of course, the Australian dollar has also hit its lowest since 2009. So if the Australian dollar falls and the Fijian dollar remains at the same value, then Fijian products or coming to Fiji does become a bit more expensive. So therefore, then people will start, considering, do we actually come to Fiji or not? It will mean that we need to take certain measures. The hospitality industry, the tourism sector needs to take various measures to be able to mitigate against those types of risks. So, Mr. Speaker, sir, of course, we've had a number of measures that we put in place. Some fiscal measures, as we announced that we, for example, have reduced duty and indeed given tax incentives for people to build warehouses. We've put incentives in respect of people to get into the housing sector, very attractive incentive rates. Only 2 days ago, I was talking to some business people, and I'm told there's about 8 different applications for people to build warehouses. Now, what does this mean? It means that they'll be importing material. It means when they import material, they pay VAT, increases revenue collection. It also means it creates jobs. So we need to keep the economy buoyant from that perspective, Mr. Speaker, sir. Of course, we are in the good position, as highlighted yesterday, that our liquidity remains buoyant also. It's doubled since the end of last year. So in other words, there's enough cash there for growth if people do want to invest. What we do want to say, Mr. Speaker, sir, is that all of us need to be aware of what is happening globally. We need to be aware of some of the ramifications of what is happening globally. We also need to be also at the same time be positive as to how we can, as a local economy, be able to, or domestically, need to be able to take advantage of the fact that we're not completely immersed in the global chain. However, we can be impacted by them, but we can also have many positive growth. So we need to, for example, strengthen further our trade ties within the Pacific region itself. We need to be a lot more smarter in terms of how we do marketing in the tourism sector. And we need to further, of course, incentivize local businesses to be able to invest within Fiji itself, to keep the growth rates up, to keep the jobs buoyant, the jobs market buoyant, and to be able to ride this particular wave, which we hopefully will be able to ride for the next 2 years or so, because generally these types of trade war, barring, God forbid, anything dramatic happens globally between China and USA and in the Middle East, that we should be able to ride out this period. Thank you, Mr. Speaker, sir.